Alrighty, welcome back. Well, earlier we were talking about inflation. Also, the Bank of Canada last week hiking interest rates by a full percentage point, the highest interest rate hike since 1998. So what does that mean for mortgage holders? And what does it mean for those who are hoping to get a mortgage or buy a home? And joining me today to talk a little bit about that is Conrad Neufeld, award-winning mortgage broker with the Mortgage Group. Mr. Neufeld, I want to thank you so much for taking some time for us today.
Thanks for having me again.
All right, so the Bank of Canada raising interest rates a full percentage point. We haven't seen this in a very long time. Has this started to impact mortgage rates, either variable or fixed rates?
So variable is the most obvious one, because anytime that the Bank of Canada increases their rates, the banks are more than willing to pass that on to the clients. So they're not going to absorb that themselves. So we've already seen variable rates rise by 1%. In terms of fixed rates, though, you might be shocked to learn that some of the fixed rates have actually dropped slightly, but albeit in the reduction direction. So what's happened is that prior to that 1% increase, that oversized increase, the bond market, for the most part, was predicting or pricing in the fact that the rates were going to go up. So before that 1% even hit the market, most of the fixed rates had already priced in that 1% or that rate hike. So now it's kind of stable, and the bond market's kind of fighting about whether, there's going to be more recessionary pressures or more inflationary pressures that are going to hit that market. So I think something to look for will be, what happens in the States at the end of July here, because the Feds are meeting to discuss whether they're going to increase their rates. And there is, some forecasts that are suggesting they're going to increase their rates by 75 basis points or up to 1% as well. If they do that, there's a good chance that the Bank of Canada is going to follow suit in September. So if that happens, then you can start to expect that a lot of the fixed rate mortgages are going to start pricing in that new upcoming rate hike into fixed rate mortgages now.
So you're in Saskatoon. If I were to walk into your office and I'm looking at a variable rate or a fixed rate, what kind of numbers am I looking at?
So under 5% right now for some of the quick close specials. So if you've already found a home, you're in that range. You could still technically get variables under 4%, but they're definitely becoming harder to find.
So you're looking at 4 or 5%, somewhere around there, depending on whether or not you're going variable or fixed.
Absolutely.
I do want to ask you about the stress test. There's this mortgage stress test that many people were talking about for several years. It forced you to qualify generally at a higher interest rate than what may have already been on the table. How has that been impacted by recent mortgage rate hikes?
So that is a super good question, because when that stress test first came into the market a few years ago, the rule was whatever your contract rate is, so the rate that you actually get for your mortgage, plus 2%, right? Or 5.25%, whichever is highest. Up until now, up until this 1% rate hike, 5.25% was the highest that you would have to pay on your variable rate mortgages. So there was a time here in the last few months where, fixed rate mortgages were giving you a lower pre-qualification than, say, a variable rate mortgage. And that's still true. There's still fixed gives you lower than variable. But now for the first time in, many, many years, your pre-qualification is going to float as the rates change as well. So now no mortgages are being qualified at 5.25%. All of them are higher than that, because your contract rate for your variable is now at a point where if you add 2%, you're going to be at 5.5% or even at 6%, depending on who the lender is.
So if you have to qualify, let's say at a 6 or 7% rate, is that beginning to squeeze out some potential house or home buyers in the Saskatchewan market? Are you starting to see some of that?
Yeah, I would say anytime rates go up to the point where they start impacting how much you qualify for, that does reduce how many buyers there are. I would say Saskatchewan tends to be a little bit of a different story, in the sense that up until recently, most people in Saskatchewan weren't buying at their tippity top highest pre-qualification, right? You might have pre-qualified for $750, but still chose to buy at $600, right? So now that your pre-qualification has dropped to $650, you might still buy at $600, right? So it's removed some, but not as many as I think people might think.
So are there any signs that the Saskatchewan housing market is cooling off, like we're seeing in some of the larger markets like Toronto or Vancouver? Sort of what are you hearing sort of on your side?
So Saskatchewan tends to be somewhat of an anomaly here. I would say, and I would lump Alberta into this as well, in the sense. Saskatchewan didn't raise their prices. Like our home prices didn't skyrocket quite like Toronto. I mean, there was places in Toronto that had gone up 200, 300%, right? We didn't see that kind of price appreciation in Saskatchewan. So we still had a long way to go before our prices were truly ridiculous. We can debate what ridiculous would classify, but housing prices didn't go up quite as fast. Also, we still end up being quite affordable relative to the rest of the country. So we're still noticing a lot of immigrants and migrants, like from other provinces, coming to Saskatchewan. And we expect that as housing prices, get more and more expensive with rising rates in those other provinces, that they're going to continue to look at Saskatchewan, even at Alberta, as more affordable options to move to.
So last time we talked, which was about a month or a month and a half ago, you were saying that mortgage rates were rising on a weekly, sometimes even a daily basis. Is that still the case? Are we still seeing mortgage rates rising, or are they rising just as fast or maybe not quite as fast as, let's say, a month and a half ago?
So right now, everything's flat. Nothing is moving, like at least for this last week, the last 2 weeks, it's been relatively quiet, other than the Bank of Canada rate change, obviously. I think, like I said, based on what the feds do at the end of this month, I think everybody's just kind of holding steady. The inflation numbers came in today. They weren't pretty. They were higher than a lot of people were hoping for or expecting. So I would anticipate that we're going to see some more rate increases as throughout the rest of this year. How high it'll go, that's what's for debate. There's, like I said, there's that conflicting battle right now with how strong the recessionary pressures are relative to inflation. And as that plays out, we might see the Bank of Canada wean the rate hikes a little bit. But seeing another 1 to 1.5% rate increase by now and at the end of the year is not unrealistic.
Just one quick thing. I don't want to put you on the spot too much here, but there is such thing as a trigger rate when you have a variable rate mortgage.
There is. Are
you starting to see some people get close to that in Saskatchewan, or are we
Absolutely.
Not really quite there yet?
No, anybody who was locking in rates in January, February, and potentially November, December of last year, anyone that's in that time frame has already gotten pretty close to that trigger rate. So I would imagine, and some might have even crossed over already. It wouldn't be a lot, but there'd be some that have. With any future rate increase, though, that happens, you're going to start seeing more and more of those triggers hit.
And that does mean that the payments do start to rise.
Even for people that had static variables, which meant that their payments were locked in. Absolutely.
Some interesting information there. Well, we'll certainly watch with a great deal of interest over the next number of weeks to see what happens. Conrad Neufeld, award-winning mortgage broker with the Mortgage Group. I want to thank you so much for being with us today.
Thanks for having me.